Oh my God, guys, the market is on a heater. Holy sun. I don't even know what to say, guys. The market is just going crazy today. Especially you've seen the thumbnail. You already know Meta is just insane right now. I've made so much money on Meta, guys. Nothing I say is a recommendation for you to buy, hold, or sell. Nothing I say is financial advice outright. So if you're new around here, tickers and tokens, hit that like button, hit that subscribe button, guys. Without any further ado, we get right into it because we know we got to talk about it. Meta, guys. Oh, man. This thing is at $191 as of right now. We're about an hour and a half away from market close. So, yeah, at $191, up 25% today. Last month, 56%. Guys, in the last 3 months, this thing has doubled. You got in, look at this, look at this. This thing was at like $89 just back in November, just a couple months ago, just like 2 months ago, 3 months ago, my bad, 3 months ago. Yeah. And look at this, all the way up here to 190. It doubled in 3 months. Now they're telling you right here, Meta shares are trading higher after the company reported better than expected Q4 revenues. It cut its fiscal year 23 expense outlook and announced a $40 billion buyback. $40 billion buyback. They want their shares so bad. Now look at this, guys. So we're gonna get more into depth into it because their earnings were just yesterday. So I always like to let the earnings settle for a day, just really analyze and break them down, see what everybody has to say about them. So let's see what Yahoo's Finance for Yahoo's got to say right here. Let me cut the volume on it right quick.
All right, earnings alert here. Investors hitting the like button on Meta earnings, up 13+% after hours after the company released its fourth quarter earnings. Share buyback, revenue beat. Dan Howley here with the most surprising thing you saw in this report. What do investors like, sir?
Yeah, obviously the stock buyback is a big deal, but there's some numbers here that are pretty interesting, and I just want to go over them real quick. I think, obviously the Reality Labs, we have that operating loss of $4.28 billion, still plowing money into that endeavor. Whether or not that'll pay off, and if it does, when, we still don't know. But you look at the Reality Labs revenue was $727 million. It's better than beat estimates. Family of Apps revenue.
Reality Labs making money. Okay. Well, I ain't gonna say making money. I think they're still losing money, but they're making more money than expected. Okay. There's something to the metaverse after all, guys. I'm seeing headlines for the metaverse stuff everywhere, so figured it had to be some reason for it. Maybe Meta's gonna pull it off, guys. Nobody had any hope in them. I remember 2 or 3 months ago, everybody was telling me I was stupid. I was stupid for buying Meta at this ridiculous evaluation it's at right now. The price it's at right now is a good deal, in my opinion. Never mind what it was 3 months ago. I'd buy it right now. Anything under like 200, 250, that's free money. That's free money, in my opinion. Nothing I say is financial advice. It's just my opinion.
That beat estimates, advertising revenue, that beat estimates. So, it's interesting to see that, and as Sean had previously pointed out, monthly active users missed on estimates, but not by too much. I think it's interesting the fact that we saw Snap, kind of with this dire warning yesterday of their next quarter. But Meta seeming to kind of pull it out of nowhere and do so well here by beating on both the top and bottom line.
Looks like a Snap problem, not a sector problem from what you're seeing right now.
Or it could be that.
Because just from my own personal experience, like I just don't know anybody that really uses Snapchat no more. But I ain't really too big on social media as it is. I use my TikTok and I got my Twitch for gaming. You can follow me at Playcating. I'll pull it up in the next video if you guys want to see it. I do stream on Twitch if you guys want to go check me out. Other than that, though, yeah, I don't really know anybody who uses Snapchat. Everybody uses Facebook. Everybody and their grandma uses Facebook. Sure, it leans for older people. It does. It definitely leans for older people, but still huge. What is it, like 4 billion people? Like half the planet uses Facebook, guys. That's just a huge audience, man. You can't shake that. That ain't going nowhere.
Meta has managed to flesh out those problems with Apple's privacy changes, right?
Yeah.
Maybe they've gotten a hold of that, and Snap is still trying to work through that. Don't forget, Meta's been, investing more in AI. They're, really trying to compete better with TikTok as far as that recommendation algorithm. I got to tell you, I use Instagram, and it seems to be doing that, as well as TikTok does now to a degree. It might not be as sticky, and obviously kids are still more interested in TikTok than they are Facebook, where their uncles yell at each other. Or
that's the only real threat to Meta, in my opinion, is TikTok. Because even I've started using it now. It's a good platform. It is. It's just a good app. I don't know what to tell you. So Apple, guys, we got to talk about it, but it's not all good news. We got Apple and Amazon reporting after the bell, guys. Amazon as well. Both of these are just massive trillion-dollar companies. So the market's going to move no matter what these stocks do. I'm going to go ahead and talk about Amazon first. They actually hit a record split adjusted high of 188 per share in 2021. Right now they're trading at 111, so they're way down. They're way down from the highs. Now here's the number I'm watching, the whisper number. You want to see whisper number of 19 cents a share. But if you're more of a earnings per share guy, they're expecting 15 cents a share, which is just barely profitable, which is where Amazon's been flirting with that profitability margin for a while. So they're always just flirting right on the line. I think their last quarter they actually came in undervalue, so under profitability. They were losing money. So if they come back with profitability, I think the stock can rally like crazy ahead of all this volatility we got in the market right now. If it gaps up after earnings, it's over. We're only gonna be on a massive run if Amazon goes crazy. But we gotta talk about the big boy now. Let's talk about Apple, guys.
Bernstein senior research analyst Tony, great to speak with you. You say you're ambivalent about Apple, and you fall in the camp of earnings estimates need to come down. Is there anything that Apple can do in this report that will change your mind about all that?
Sure, and good morning. Look, I think there's a tremendous amount of uncertainty, more so than usual with Apple, around this quarter and somewhat around the year. So for this quarter, Apple had production delays. They also had an extra week. And so I think it's been difficult for analysts to really land on a number that they feel comfortable with. But more importantly, regardless of the quarter, investors will focus about Apple's outlook. So if they had production issues this quarter, are they bullish that they'll catch up on poor production last quarter and have a strong remainder of the year? So I think there's a near-term question there. But I think there's also a broader question.
That's the big focus for sure. Is the revenue? Is how is their outlook going forward for the rest of fiscal year 23, as well as just the China issue, guys. We got to be real about it. China is causing a major problems for production. They have been, but it seems like China's starting to open back up now. So maybe, I don't know, maybe Amazon can do something. I said Amazon, Apple. Maybe Apple can do something with that. Maybe they can actually get a production back up through China. So I heard months ago they were starting to come back through India. They were trying to open up more plants, get more production going through India instead of China, which I think that's a smarter move overall, in my opinion. It's just more trustworthy government, in my opinion. But that's just my opinion, not a political channel.
Question, which is, did Apple benefit from the pandemic? Their operating profit was $65 billion in the year before the pandemic. Last year was $120 billion. You had this huge company that effectively doubled profits through the pandemic. And there's a big question, will we have a lull? We're seeing a lull in the PC market. We're seeing a lull in other areas of consumer spending. And so I think that's a big question. There is, consensus is sort of thinking that Apple will grow maybe 1 or 2% this year. And I think that's the question, whether Apple will go through a digestion period this year and potentially next year even, following tremendous results over the last couple of years.
You also made
That's a fair point. Apple has been definitely a big beneficiary of the virus. They're just going to call it the virus. You know what I'm talking about. Amazon as well, especially. Everybody at home, everybody's getting stuff delivered to their house. Amazon especially. So, they're going to get terrible comps last year, but I would argue too, the market likes to look forward. And if they have bad earnings, they had a couple bad earnings in the last couple periods, so they're really competing with those instead of the ones from a couple years ago. But the market doesn't look too far back, but it does look very far forward, if you get what I'm saying. So it's looking at the last couple ones and seeing how they stack up against those.
At the point about Apple's valuation, and certainly that, from your standpoint, hasn't been helped by this 12% run we've seen in shares so far just this year. But in 2019, you say Apple's valuation was much, much lower. I mean, I think it was like 16 or something, and now it's in the 20s. And so that factors in. I mean, for you, it's harder to see estimates coming down and Apple holding on to that valuation.
Yeah, look, I think Apple over the last 3 or 4 years has proven that it's a more diversified company than just a hardware company. The services business has really grown. They've had good gross margin strength. But to your point, when Apple bottomed in early 19, the stock was trading about 13 times earnings, about 10% discount to the market. Today, Apple's trading at a 30% premium to the market and trading about 24 times earnings. So
No, you can't choose to look at it that way, though. We're still talking about tech companies with massive growth potential. Even Apple, let's be real, they somehow managed to outdo it every year. So I really kind of disagree with that take. I'll be honest. I mean, it's a huge company, sure, but Apple just always finds a way to pull it out, man. And they'll find a way to innovate. I know Tim Cook isn't really known for the innovation side of Apple, but they always find a way, man. Don't ever bet against Apple. You just don't do it. Investors have learned that the hard way over the past 10, 15 years. You could have just put all your money in Apple and been okay, but that's not what I'm going to do. I don't think that's what you should do either. But again, not financial advice. But let's take a little snapshot look at the economy too, guys. So overall jobless claims came in at 183,000. It's a 9-month low, guys. 9-month low. 183,000. Even as more firms announcing layoffs. So still got more and more people out here losing their jobs, guys. But overall, jobless claims are down. I think it even goes on to say that unemployment benefits are even falling off a little bit. Let's hear them
another
talk about
3,000 coming in at 183,000, continuing claims dropping by another 11,000. But what was also interesting this week, Marty, was that JOLTS report as well that showed that there, is still 11 million jobs opened right now.
And that's 7 million. That's 700,000 more jobs than were last month. I mean, the amount of posted and unfilled jobs are going up. So that means that's why, in a sense, the quit ratio is a little less also. Right. But that's why people are staying in their jobs. If they're leaving, there's plenty of choices to go to with those 11 million new jobs that are being posted if you have the skill sets. So, the fact is that that's why unemployment is low. We can't be in a recession if you have low unemployment and rising gross domestic product, which is what we have. The first quarter in March of this year will tell us a little more about what's going on, but we've had 2 successive quarters of gross domestic product growth, continual job postings increasing, people staying in their jobs, less unemployment. That's not even stagflation. I mean, so we're a little bit a ways from recession. That's economy struggling, to expand, and the Federal Reserve is using its monetary policy to kind of slow down that expansion to avoid inflation.
All right, coming.
You said it all right there. They're slowing down the expansion. I mean, we still got it though. This is what happens when you have massive inflation like we've had. That's just the way it is. Like the inflation we had was through the roof. You got to understand, like we quintupled the money supply in 2 years. We got 5 times more money floating around like we did 2 years ago, and that's insane. We printed more money in the last 2 years than we've had in the entire history of the entire United States, guys. So it's going to take a while to adjust for something like that. It's going to take more than a few rate hikes to really, put a dent in that. But just overall outlook for the economy, you can see it's still GDP's up, like you said. Jobless claims are low. Unemployment benefits are low. So economy's looking strong for right now. I mean, that's tentative, sure, but hey, full steam ahead right now. Market's got nothing to complain about. And if these earnings reports come out good, Apple and Amazon, and yeah, I'd say we're off to the races, guys. So, but we'll have to wait and see, won't we? But yeah, guys, I'm just gonna leave it right there. And just a quick little video for you guys. hit that like button, hit that subscribe button if you're new around here, and follow me on Twitch. That's at PlayKayton, PLAYK8N. That's the number 8, PLAYK8N. I'll see you guys in the next one. I'm out.